Hello, gorgeous. Last week on the podcast, I talked about paying estimated quarterly taxes. It can feel so intimidating when you are at this time of year facing a tax bill for all of last year. And you're thinking like, oh my God, how do I make this better? How do I get out of this mess? Maybe you've just learned that estimated quarterly taxes are what you're supposed to be on top of when you're self-employed. And maybe you're wondering where you were ever supposed to learn that information. And I want to be here just to say, if you didn't realize, that there's no tax education in this country. And so a lot of people don't learn the rules of estimated quarterly taxes until they violate them. It's a sucky way to learn. And, I might be a one-woman show trying to fix this problem, but here I am. And it's my goal to help you get on top of this system so that you don't face a giant, debilitating tax bill, right? That's kind of the whole point of why quarterly taxes exist. They exist so that people who earn money where there is no withholding because you're not paid on payroll, it's the way that we are meant to be paying our taxes. In fact, it's the law. It is required. And if you don't pay quarterly taxes when you earn money as a self-employed person, then you'll pay penalties and interest, right? So it is actually really important and key to get on top of. All right, so last week, I taught you how to pay quarterly taxes based on last year's taxes. So if you're interested in that, that's the easiest method, and it's the one where you can actually reference a number on your tax return and know the answer definitively. So for that reason, that's the one that accountants tend to tell their clients. It's the one that TurboTax tends to spit out if you DIY your taxes. So it's the most common method of paying quarterly taxes because it's the simplest to understand. However, let me paint the scenario for you that shows you why there's a second way to pay your quarterly taxes and why it might be so necessary for you. All right. So rule number 2 for paying quarterly taxes, it's called a safe harbor rule. And again, last week's episode was about safe harbor rule number 1, which is that you can pay this year 100% of last year's tax broken up into quarterly chunks, 1 quarter at a time on each of the quarterly deadlines. Okay, that's rule number 1. Now, rule number 2, I want you to just picture the scenario where this year's income is nothing like last year. Maybe that's because your business is down. I don't know about you. Maybe you were affected by the fires in LA or Hurricane Helene like me. And so maybe your income is dramatically down from that. It could also be life circumstances, right? What if you had a baby and you took some parental leave, or someone in your family got sick and you were caring for them, right? There are a lot of different reasons why your income this year might be very, very different from your income last year, and why it might not make any sense, therefore, to base this year's quarterly tax payments on income that you made last year, right? It's not going to be very doable to make a big payment based on big income when you have low income now, right? This can also work in the reverse. If you have a ton more income this year than you did last year, your taxes are going to be higher, right? That's sort of how it works. When you earn more money, your tax rates go up. And so if you earn a bunch more this year, you might be able to pay your estimated quarterly taxes based on last year's amount, but you're still going to face a big bill this year because you won't have paid nearly the amount that you actually owe. All right. So for this reason, there is a second safe harbor rule for paying your quarterly taxes that will help you get your head around a big change in income when this year's income is not similar to last year's income. So that rule says you can pay 90% of this year's tax every quarter. Not the full 90%, but over the course of the year, if you pay 90% of the tax that is due this year, broken up into quarters, then you will not face penalties or interest. You will meet the safe harbor, okay? Now, meeting the safe harbor, either one, it doesn't mean you've paid the right amount of tax. And here's the thing. Paying estimated quarterly taxes, paying taxes at all, is an estimate, right? We live in a system called a pay-as-you-go tax system. And what that means is that you actually are required by law, everyone is, to pay your taxes throughout the year as you go. And then, but the thing is, that for everyone is an estimate. Even for people who are employees who have withholding taken out of their paychecks, they're filling out a piece of paperwork called a W-4 that shows their boss, like, okay, I want my withholding to be, high, medium, or low. But if you've ever filled out a W-4, you also know that you can be totally wrong on that thing, right? You can get it wrong. And that's not just because you didn't know what you were doing. It might have been, but it could also be because you have a change of circumstance during the year, right? Maybe mid-year you get married. Maybe your spouse becomes unemployed. Maybe you become unemployed. Maybe you get the client of your dreams and suddenly your income goes up, right? Lots of things can change your finances throughout the year. This is normal. And also, the important thing to understand is that we don't determine tax rates until the year is finished. So this is why tax paying throughout the year is an estimate for everyone, right? We don't actually know what our income tax bracket is until the end of the year, when you have the ability to go back through everything that happened for that 365-day period and tally up all the actual dollars that you made, right? Until December 31st, you're just guessing, right? That's the whole weirdness about paying taxes. You have to pay taxes based on a guess of what you're going to earn without perfect information, because none of us can tell the future. So usually people who are employees, they're paying about the right amount or something, right? Because they have some withholding coming out through their paycheck. So as long as they filled out that W-4 with some degree of accuracy, then their taxes won't be totally off when they file their tax return. But what I'm illustrating to you right now, right here, is that in fact, taxes are an estimate, and filing your annual tax return, the act of doing that filing, is actually the moment of reconciliation. That is the time where we actually tally up everything that you earned last year, we calculate the tax on it, and then we tally up all the payments you made toward that amount. Okay? So there's a basic math equation set up in your tax return, which is total income earned, total taxes owed, total payments already paid. Ding, ding, ding. That's what quarterly taxes are about. They go into that bucket. And so when you subtract total payments made from total tax owed, you get hopefully a positive number, a refund, right? If you overpay the actual amount you end up owing, then you will get a refund. You get that money back. It's your money, right? But if you underpay it, then it will show up as a tax bill. And a tax bill just means you underpaid your taxes for the year, all right? Now, it's not a huge deal. We know we don't know the future. We know income goes up and down. People's lives change all the time. So it's not a big punishment if you get it wrong. But if you underpay too much, then you are supposed to be making estimated quarterly payments on the IRS website to correct that, right? To actually get yourself caught up. And you are not supposed to wait until April 15th to do that. You're supposed to do it mid-year. So you're supposed to actually check in with your financial situation throughout the year and make payments if you realize that your current payments are not going to cover your full tax bill. All right. I know that might feel like new information to you. And I say this with absolutely no judgment. You probably never learned this in high school, as I think we all should. But I want to tell you now, right? Because now is when you can fix it. All right. And as we approach that April 15th deadline that I know so many people who are self-employed dread, the reason that people dread it is because they haven't been paying taxes through the year, and they know that it's time to pay the piper, and it gets really scary when that bill gets big. And actually, the beauty of paying estimated quarterly taxes and knowing how they work is that you don't have to dread tax day, because actually what it means is you've paid a huge portion, most if not all, of your taxes already when April 15th comes around. And so you usually just have a little bit of making change, right? Maybe a little bit of an overpayment and you get a refund, or a little bit of an underpayment and you have a small bill to settle up, right? But the whole point of quarterly taxes is to make April 15th less of a big deal, less painful. All right? That's the point. All right. So paying 90% of this year's tax is a little bit tricky. I'm not going to lie to you, but let me just give you the cheat sheet version of it. What you do in order to pay in real time as you go based on this year's numbers is you actually set up a system of doing your books once per quarter. Okay, so each quarter before the quarterly tax deadline, you go through all the income that you brought in through your self-employment, you calculate all the expenses that you made, and then you do the math to see what the difference is, right? And that is your taxable profit. Whatever you keep is profit, and that's taxable. You can just run that number through an online income tax calculator, and it will give you a pretty good estimate of what you'll owe in taxes on that amount. All right? And you can do it manually as well if you know you're going to owe self-employment tax 15.3% on that amount, plus you're going to owe federal income tax. That number is a little harder to gauge because, it's an estimate. Before you know how much money you made for the year, you can only estimate, you can only guess. Most of you listening, it's going to be somewhere between 10 and 20%. All right. For most of you, results may vary. So you might want to go play with an income tax calculator to just get a sense of like your income from last year, what kind of average tax rate that actually gave you. All right. So what you're doing is every single quarter, the system you want to set up is that every single quarter you do your bookkeeping. You are tracking your income, tracking your expenses. This gives you the ability to know your profit. And when you know your profit for the quarter, you can make an estimate of what tax you owe on that. And then in real time, before April 15th, June 15th, September 15th, and January 15th, those are the quarterly tax deadlines, you just log into irs.gov and you make a payment. Okay? That's how it works. The cool thing is these payments may not be evenly spaced. They might not be even amounts. It might not be $2,000 each quarter. It might be something more lumpy, right? That actually corresponds to the actual income you made that quarter. And think about that for a second. When you're paying tax based on actual cash in your bank account, you're paying more when you have more. You're paying less when you have less. What this rule means, this second safe harbor rule, it's much more humane because it actually corresponds with the real dollars in your account. So it's going to be more closely related to the tax you actually owe. It's going to be more accurate, but it's also going to be less painful. So it's really a wonderful thing. All right. Cool. So I hope that gave you a sense that there really is a fix to this like massive dread of a huge tax bill coming for you. If you are facing that right now, it's a tough one. It's a really tough problem. This is one of the number one issues that I teach people and coach people through in my program called Money Bootcamp. It is a way to fix this forever. Getting on top of estimated quarterly taxes, it requires, putting on your big girl pants, but doing it fixes this forever. Forever. It makes you not have to dread April 15th, and it just gets a system in place that makes you have fewer panic attacks and less heartache. All right. So if you are interested in that program, something you should know is that every single quarter I do a live session where I teach how quarterly taxes work, and we do some sample calculations. And it's a live session where you can come and ask me questions. And there's other people asking questions too, so often someone else will ask a question that is relevant to you. And we do calculations in real time to really get our head around the nuance of paying quarterly taxes. This is something I think most people want some hand-holding around, and it's something that most accountants, if you just pay for a tax return, you don't get. And so part of the purpose of my program is to really help you through this issue, which is a real hard one when you're self-employed. So if that feels interesting to you, if you'd be interested in that quarterly live session with me, walking through different scenarios for paying your quarterly taxes, getting on top of this finally once and for all, you can watch an on-demand class that I taught about these systems, what you need, how to do it, and it talks about my program And it also has the best deal. If you watch this on-demand class, it also has the best deal that there is that's available for joining my program. So it's worth it just for that, even if you don't actually watch the class. But the class itself does talk about the systems that we set up in the program. And even if you never join, it's just a really nice kind of mindset set, because it really helps you understand, like, oh, that's why I've been feeling so confused about this and so misunderstood. As a creative person, or a person doing really care-based work that a lot of accountants don't really relate to very well. So if you're interested in watching that free class, learning a little bit about my program, and possibly joining with a free bonus session with me or my trained tax advisor, you can watch that at go.sunlighttax.com/register. That's go.sunlighttax.com/register to watch the free class about making your taxes easier. And I will also let you know that we're doing the live quarterly taxes session. We're doing it on April 9th. So as long as you're in before April 9th, you will be there for that next live session. That's going to be really great. All right. I hope today's session was interesting for you. I hope you learned something about paying quarterly taxes when this year's income is different from last year's. I hope it helped you no matter what. And again, if you're interested in watching that free class on systems to make your taxes easier, you can get that at go.sunlighttax.com/register. Watch it on demand, and I'll stick a link in the show notes so that you can get it there as well. All right. I'll see you next week, everyone. Bye. Thank you for watching. If you like this video, be sure to like, leave a comment, and subscribe to my channel. I'm so grateful for that. This video is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.